Welcome back, everyone. It's been a long road for electric vehicle maker Canoo, and the company has hit another speed bump again, a $1.5 million fine from the Securities and Exchange Commission. Still, though, the company, which has a small manufacturing plant in Bentonville, is working to scale up production of its vehicles for customers including NASA and Walmart. Arkansas Business has, of course, been following the company, and editor Lance Turner joining us now. Lance, all right, let's talk about this fine, $1.5 million. How big a deal is this to Canoo's future success?
Well, I'll tell you, this $1.5 million fine has been in the works for a few months now. Canoo actually announced it earlier this year. It really has more to do with Canoo's past than its future in some respects. Essentially, the SEC says that former executives, a CFO and a CEO, made unreasonable revenue projections, actually misleading investors about how much sales that the EV maker was going to be able to do just before Canoo went public in 2020. Two executives have then been temporarily banned from public company boards and also fined individually. And Canoo admits no wrongdoing in any of this, but it agreed to the $1.5 million fine to settle those allegations with the SEC.
Wow. All right. Well, Canoo made headlines, of course, in 2021 after it went public, announcing it would move its headquarters to Northwest Arkansas. How has the company fared since making that?
Well, it's been a little bit of a mixed bag for Canoo, which not only has ambitions in Arkansas, but also in Oklahoma, where it just purchased property for a major manufacturing operation and already has a battery module facility underway in Oklahoma as well. But this year, the company has touted deals with Walmart to buy a few thousand vehicles for the retailer there. In July, it delivered 3 astronaut transport vehicles to NASA for NASA's Artemis space program, and it expanded a partnership with the Department of Defense to develop advanced battery technologies for the military. In all, Canoo says it's got about $2.8 billion worth of orders in its pipeline right now.
But at the same time, and you reported on this a number of times, the company has signaled that getting enough cash on hand to feed all these operations has been a big challenge.
That's right. Yeah, this is a cash-intensive business. They are essentially trying to get a major manufacturing operation up from scratch, and so it's been burning through millions of dollars worth of cash to get those operations up and running. It actually finished the first quarter with $6.7 million in cash on hand. That sounds like a lot, but in the scale of what they're trying to do, it probably isn't as much as they need. And it also reported a $91 million quarterly loss. Meanwhile, the stock was nearly delisted from the NASDAQ earlier this year for trading below required minimums. We're going to know much more about how the company is doing in the second quarter when it reports its quarterly results coming up on Monday for that most recent second quarter.
Wow, that ought to be an interesting report, no doubt about that. All right, Lance, thanks for joining us as always. And as always, you can read more about this on arkansasbusiness.com.